In this video, we will reveal the 3 dominant companies that wealthy investors are quietly loading up on right now to secure their financial future. These are not speculative gambles or flash-in-the-pan trends, but rather the literal foundations of the global economy that are currently trading at valuations that might not stay this low for long. The companies we are discussing today hold such massive scale and influence that it is nearly impossible for the modern world to function without them. They own the infrastructure of the internet, the brains of every artificial intelligence system, and the physical manufacturing plants that produce the most advanced technology on Earth. These businesses possess durable competitive advantages and the kind of compounding potential that turns modest portfolios into generational wealth. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. Our first company is the undisputed king of the current technological revolution, and its name is Nvidia, ticker symbol NVDA. To understand why the smartest money in the room is flowing into this stock, you have to look past the stock price fluctuations and understand the massive shift in global computing. For decades, the world ran on general-purpose central processing units, but we have reached a breaking point where those chips can no longer keep up with the demands of modern data. Nvidia has pioneered the shift to accelerated computing using graphics processing units, which are the only hardware capable of training and running the complex large language models that define our era. What makes Nvidia a forever hold is its massive software moat. While other companies try to build competing chips, Nvidia has spent over 15 years building a software ecosystem called CUDA. Millions of developers are already trained on this platform, and every major artificial intelligence application is optimized for Nvidia hardware. This creates a level of customer stickiness that is almost impossible to break. Even as competitors enter the space, the cost for a company to switch away from Nvidia is not just the price of a new chip, but the cost of retraining their entire engineering workforce and rewriting their software from scratch. When we talk about the scale of Nvidia, we have to look at the data center. This is no longer a company that sells parts to teenagers for video games. This is a company that builds the central nervous system for the largest corporations on the planet. In the last year, every major cloud provider has signaled that their capital expenditures are going up, not down. They are in an arms race. If you are a cloud giant, you cannot afford to have the second fastest AI cluster. You need the fastest, and currently, the fastest is synonymous with Nvidia hardware. This creates a cycle of reinvestment that feeds directly into Nvidia's bottom line. Financially, the numbers coming out of Nvidia are nothing short of historic. In its recent fiscal third quarter of 2026, the company reported record revenue of $57 billion. That is a 62% increase from just a year ago. Even more impressive is their data center revenue, which hit $51.2 billion. This shows that the biggest cloud providers on the planet are essentially in a race to buy every single chip Nvidia can produce. With gross margins sitting around 73%, Nvidia is generating an incredible amount of cash that it is using to buy back its own shares and return value to investors. This level of profitability is almost unheard of for a hardware company of this size. It suggests that Nvidia has massive pricing power. They are not just selling a commodity, they are selling a unique, mission-critical capability. The company is now moving into its next phase with the Blackwell and Rubin architectures. The Blackwell generation is already seeing unprecedented demand, with supply likely remaining constrained well into late 2026. This means the revenue is already essentially locked in. Following Blackwell, the Rubin platform will push the boundaries of energy efficiency and computational speed even further. One of the biggest bottlenecks for AI right now is power consumption. Data centers are running out of electricity. By creating chips that provide more compute per watt, Nvidia is solving the most critical problem for its customers. But the story of Nvidia is also about the expansion into sovereign AI. Nations around the world have realized that artificial intelligence is a matter of national security and economic sovereignty. Countries are no longer content to let their data reside in foreign clouds. They are building their own national AI infrastructure. Whether it is Japan, the United Kingdom, or nations across the Middle East, these sovereign entities are buying Nvidia chips by the thousands. This creates a brand new massive customer segment that didn't exist 3 years ago. It provides a diversified revenue stream that is independent of the typical Silicon Valley tech cycle. Furthermore, we are seeing the rise of the industrial metaverse and robotics. Nvidia's Omniverse platform is allowing companies to build digital twins of their factories. They can simulate an entire manufacturing process in a virtual world, powered by Nvidia chips, before they ever turn on a physical machine. This saves billions in efficiency and represents the next frontier of the digital economy. When you buy Nvidia, you are buying into the digitization of the physical world. CEO Jensen Huang has noted that the order backlog for these systems is massive, with hundreds of billions in revenue visibility extending well into the future. By owning Nvidia, you are not just betting on a chip maker, you are owning the utility company of the artificial intelligence age. You are owning the infrastructure that makes the modern world possible. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Moving to our second powerhouse, we have Alphabet, ticker symbol Google. While many people still think of this simply as a search engine, the reality is that Alphabet has transformed into a sprawling infrastructure play that owns some of the most valuable digital real estate in history. Think about the daily habits of billions of people. They use Google Search for information, YouTube for entertainment and education, Gmail for communication, and Android to power their mobile lives. This massive data advantage is what makes Alphabet such a formidable player in the long term. It is not just about the data they have, it is about the real-time feedback loop they maintain with nearly every connected human on the planet. This loop allows them to train their artificial intelligence models on a scale that few others can match, creating a cycle of improvement that only gets stronger with time. A few years ago, there were fears that new artificial intelligence chatbots would kill the search business. However, Alphabet has effectively silenced those critics by integrating its Gemini models directly into its core products. As of early 2026, Google Search is seeing more usage than ever before. This is because AI has not replaced search, it has expanded it. Instead of just clicking on links, users are now asking complex multi-step questions that Gemini can synthesize into comprehensive answers. This keeps users on the platform longer, providing even more opportunities for high-value advertising. In fact, Alphabet recently reported that search revenue grew 17% year-over-year, reaching over $63 billion in a single quarter. The company is now rolling out a broader range of AI-integrated ads within these search overviews, which is expected to drive significant incremental revenue throughout 2026. Alphabet is also winning in the enterprise space through its cloud division. Google Cloud has become the breakout story of the mid-2020s. In the most recent financial results, Google Cloud revenue grew at an incredible 48%, reaching nearly $18 billion for the quarter. This growth is being driven by the AI supercycle. Thousands of enterprises are choosing Google Cloud specifically because of its custom-built AI infrastructure. Alphabet has vertically integrated its stack, using its own tensor processing units, or TPUs, to offer a cost-effective alternative to third-party hardware. This vertical integration allows Alphabet to capture a larger share of the profit margin that usually goes to chip designers. The cloud business is no longer just a growing division, it is a major profit driver, contributing over $5 billion in operating income in the last quarter alone. Beyond search and cloud, YouTube has evolved into a diversified revenue machine. By 2026, YouTube's annual revenue from ads and subscriptions has surpassed $60 billion. It has successfully navigated the shift to short-form video with YouTube Shorts while maintaining its dominance in long-form content. The platform now has over 325 million paid subscribers across its various consumer services. This provides a massive, predictable stream of recurring cash flow that complements the more variable advertising market. Wealthy investors love this mix of sticky subscription revenue and high-margin ad growth. YouTube remains the top streaming platform in the United States living room, holding a lead over traditional television and even the largest subscription streaming giants for nearly 3 years running. From a financial perspective, Alphabet is a fortress. The company recently hit a $4 trillion market capitalization and maintains over $125 billion in total cash and marketable securities. While the headlines have focused on their massive capital expenditure plan of up to $185 billion for 2026, investors should see this for what it is. This is a defensive and offensive move to ensure no one can catch them in the AI race. This spending is being used to build the data centers and the custom chips needed to dominate the next decade. Despite this unprecedented spending, Alphabet's operating cash flow is so strong that analysts expect the company to remain free cash flow positive. The stock still trades at a valuation that is quite reasonable compared to its growth profile, often trading at a forward price-to-earnings ratio that is lower than many of its big tech peers. One of the most exciting aspects of the Alphabet story is Waymo, the company's autonomous vehicle division. As of February 2026, Waymo has logged over 200 million miles on public roads, driven fully autonomously, and is completing over 450,000 paid rides every single week. It has expanded its commercial operations to major cities like Phoenix, San Francisco, Los Angeles, and now Miami and Nashville. Recently, Waymo raised $16 billion in a funding round that valued the unit at $126 billion. This highlights the massive value sitting inside Alphabet that is often overlooked. Waymo is no longer a science project, it is a real business with a multi-billion-dollar revenue run rate that is scaling rapidly. Wealthy investors are loading up on Alphabet because it represents a collection of monopolies. Each one of its segments, search, YouTube, and Android, is a market leader with a massive moat. When you add in the explosive growth of Google Cloud and the untapped potential of Waymo, you have a company that is uniquely positioned to benefit from almost every major trend in technology. Alphabet has the data, the infrastructure, and the capital to win the AI race, and they are using all three to widen their lead. By owning Alphabet, you are owning a piece of the digital world's primary gateway. Our third and final stock is the most important company you might not be following closely enough, and that is Taiwan Semiconductor, ticker symbol TSM. If Nvidia is the architect of the digital age, Taiwan Semiconductor is the builder. This company is the largest and most advanced chip foundry in the world, meaning it actually manufactures the physical silicon designed by the biggest names in tech, including Nvidia and Alphabet. Without Taiwan Semiconductor, the modern world essentially stops. They have a virtual monopoly on the world's most advanced manufacturing processes, and their lead is only growing. The competitive moat here is the sheer cost and complexity of what they do. Building a single modern semiconductor factory, or fab, can cost over $20 billion and take years to complete. Taiwan Semiconductor has mastered the art of high-volume manufacturing with extreme precision. As of early 2026, they have officially moved into mass production of 2-nanometer chips. This is the most advanced technology in human history. It allows for chips that are significantly faster and up to 30% more energy efficient than the previous generation. This is a critical development for the AI industry, where power consumption is the biggest hurdle to further scaling. Every major player in AI is currently fighting for allocation on Taiwan Semiconductor's 2-nanometer production lines, which are reportedly booked through late 2026. Wealthy investors love this stock because it is a play on the entire tech sector without the risk of picking a single product winner. Whether the future is won by artificial intelligence, autonomous vehicles, or advanced smartphones, they will all need the chips that only Taiwan Semiconductor can make at scale. In 2025, the company's annual revenue surpassed $120 billion, and management is guiding for another 20 to 25% increase in sales for 2026. They are literally the only company that can fulfill the orders of the world's most demanding tech giants. If you want the best chips on Earth, you have to go to Taiwan Semiconductor. Despite being the backbone of global technology, Taiwan Semiconductor often trades at a lower valuation than the big American tech firms because of perceived geopolitical risks. However, the company is aggressively diversifying its footprint. They have recently accelerated their expansion in Arizona, where they are now building a megafab cluster with plans for at least 5 distinct fabs. By moving production closer to their biggest American customers and securing billions in government subsidies, Taiwan Semiconductor is effectively de-risking its business model while expanding its monopoly. This geographic diversification is making the company more resilient to political shifts while ensuring it remains the primary partner for the United States technology industry. From a financial standpoint, the company is a cash-generating machine. They maintain gross margins above 60% and net profit margins that often exceed 40%. Even as they spend over $45 billion a year on capital expenditures to build the future of computing, they continue to pay a growing dividend and maintain one of the strongest balance sheets in the industry. For long-term investors, Taiwan Semiconductor represents the ultimate pick-and-shovel play. They don't have to worry about which AI model is the best, they just have to keep building the chips that run them all. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. When you look at these three businesses together, you see a complete ecosystem of wealth creation. Nvidia provides the intelligence, Alphabet provides the platform and data, and Taiwan Semiconductor provides the physical reality. Each one has a moat that is getting wider and a financial engine that is producing record-breaking results. The question for long-term investors is not if these companies will be bigger in 10 years, but how much of them you want to own before the rest of the market fully catches on. Between the massive software ecosystem of Nvidia, the global data dominance of Alphabet, and the indispensable manufacturing monopoly of Taiwan Semiconductor, which business model do you believe has the most unbreakable competitive advantage for the next 20 years? Let us know your thoughts in the comments. Do not forget to like the video, share your thoughts in the comments and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.